Hello, my name is Chalyss Evans, and today I'm going to be talking about insurance and its effect on the family. This presentation is a project for my family and child science class. I have picked this topic because many consumers think about the expenses of insurance rather than the benefits. Just like saving money for a rainy day, choosing to invest in insurance can protect consumers in the case of unforeseen events. It is best to be prepared for the future now rather than when an event strikes. My goal is to inform consumers of 3 of the main types of insurance as well as their benefits. By the end of the presentation, I hope that you are more informed about what insurance entails, as well as how to go about properly getting insurance. Presented here are the learning outcomes that will be discussed throughout the presentation. After this presentation, learners will be able to list and define 3 different insurance types, understand the rights of the consumer in insurance, describe the benefits of having insurance policies and the negatives of not having them. Finally, explain the steps to getting one of the 3 insurance policies. There are multiple types of insurance out there in the world. When someone says insurance, what is the first thing that comes to mind? The first thing to come to mind for many consumers is health insurance. The first insurance I will be going over is home insurance. This can be for homeowners and renters. The second will be auto insurance, also known as car insurance. Auto insurance can cover multiple vehicles and drivers. The last coverage I will go over is life insurance. This insurance can be split into 2 types, short-term and long-term. While I will only be going over 3 types of insurance, it is important to note that there are many more. Other types of insurance include health, as mentioned before, dental, flood, earthquake, pet, travel, and more. I would like to point out that flood and earthquake insurance are not included in home insurance. While some insurance policies will add this on for an extra fee, it is generally not included in a regular home insurance plan. They can, however, be purchased in a separate policy. Things such as this need to be made clear. Otherwise, should something like a flash flood come about, some may think they are protected, but are surprised to find out they are not. As I mentioned earlier, many consumers focus on the cost of insurance. Their concerns are along the lines of, how can I afford this? How can I fit this in with other bills? Another thing that consumers might question is how insurance will benefit them. It can be stressful trying to add another payment on top of what bills or responsibilities one might already have, especially when you are unsure how or when your money will support you. This is where knowing the importance of insurance can be extremely beneficial to every consumer. Not only does insurance help you, the policyholder, but it also protects your loved ones as well. When an unexpected disaster strikes, it can result in significantly large bills. This could be if you were to get in a car accident and need your car repaired, a break-in on your home, or an untimely death. Getting insurance can protect you and loved ones from expenses that you aren't prepared for. For example, home insurance can cover temporary living for families while they wait for a new place to stay. It can cover replacement costs of stolen or damaged items and even repairs. Auto insurance can cover all or partial amounts of the cost for repairing or replacing a car after damage. Some policies will even help with medical bills should you or a passenger get hurt. In the case of an accident that your car was at fault, it can help cover the medical bills of an injured third party. Life insurance can cover funeral cost, debt, tuition, dependent care, and more. These kinds of assistance are crucial when in the face of times that can be stressful as well as emotionally and physically draining. As a consumer, you have rights when in the marketplace. This means that you have a type of authority when shopping. A well-known example of this is that a car's salesman cannot say he's selling you a brand new Honda, then give you the keys for a 30-year-old Chevy. As a consumer, you have the right to know what you are being sold. The same thing goes for insurance. In insurance, consumers have the right to ask for reports. This can be both the types of reports the insurance company is making and all the planned uses of the information collected about you by the company. Consumers have the right to know why their coverage was canceled or why their premiums or monthly payments were raised. Keep in mind, any medical reasons will come from a physician. Consumers may also fix incorrect information that the company has filed for them, such as your name or address. Finally, consumers can get a copy of their credit report if that was the reason the company turned down their application for a policy. Now that we've discussed the background of insurance, it's time to now focus on each of the three types individually. Like most things, we'll start with the home. Homeowners insurance, also called hazard insurance, is the protection of the home and belongings from damage. Coverage can include property such as the land the house is on or outdoor furniture. These policies can also cover liability. Should someone get hurt on your property, your insurance can cover the cost. Home insurance policies protect the home from fires, theft, and windstorms. However, I will mention again that earthquakes and floods are normally not included. With that being said, for those of you that don't own a home, this insurance is not limited to only homeowners. Those who rent their home can get renter's insurance. Having insurance can be a great relief when needed. Being prepared can really pay off. Some of the positives of having home or renter's insurance are providing temporary living, saving money, and saving belongings. You'll notice when we go through the presentation that a positive of each insurance is saving money. That is because the cost of an insurance plan can be incredibly lower than the cost of repairing a damaged roof or buying a new flat screen TV after yours was stolen. In the same move, your stolen belongings can be replaced without the time it takes to save up to buy another. Without home insurance, your family can be without a home during the time it takes to find another suitable accommodations. You could end up having to spend money from your savings on something it was not designated for, or you could lose out on your personal items. Auto insurance is the coverage of bills generated in the event of an automobile accident. Auto insurance is divided into 5 sections: liability, personal injury, collision and comprehensive, gap, and underinsured or uninsured. The first, liability, is when you are at fault for hurting someone else or damaging something with your car. If you hurt someone else, your insurance will help pay for their medical bills alongside their own insurance plan. Should you damage someone else's property or car, your insurance will help to cover those costs as well. Personal injury is similar, but rather than covering a third party, you would be covering yourself or passengers in your car. This coverage is not only for medical bills, but medicine, prosthetics, or hearing aids. Some of this coverage for personal injury can assist with lost wages if you are out of work due to injury. Collision coverage is for when your car is damaged and you are not at fault. This is specifically for when your car is damaged by another car. It does not cover break-ins, weather damage, or anything of the sort. Comprehensive insurance, on the other hand, does cover theft of the car, vandalism, and weather damage. If you were to find that a storm broke a branch off of a tree and destroyed your car, comprehensive coverage would cover it. Despite the fact that comprehensive covers theft, it does not cover theft of the belongings in your car. That would be covered with your homeowner's insurance policy. The next type of auto insurance is GAP. GAP insurance is for those who are leasing a car. This plan will pay the difference between what you still own on the car and its cash value, whereas comprehensive policies will only pay the cash value for the car. The last section of auto insurance is uninsured or underinsured. This section will cover you if the other person in the accident doesn't have insurance or doesn't have enough coverage themselves. Your policy handles the difference between what you're owed and what the other person may or may not be able to give you. Uninsured and underinsured may not always be bundled together. They may have to be purchased separately. The same as having home insurance, there are many positives with having auto insurance. It can help replace the family's car. If you only have one mode of transportation, or you run very different schedules and sharing a car with others in your home may be too difficult, being without your car can cause a large hassle. For some, it's their only transportation to their place of work. Insurance can provide the money you need to get a replacement vehicle. Once again, it can save you money. It can help with footing the bill for repairing your car. You pay your monthly premiums, then insurance handles the rest, unless you're informed otherwise. Lastly, you don't have to worry about paying for the whole of a medical bill after an accident. The negatives of going without insurance are that you are faced with multiple bills after an accident. Accidents are scary times. If you or a passenger are hurt, then your focus is on recovery. If no one was hurt, but your car was damaged, then you may have to get it fixed. Or, in the case of theft, you're left without a car at all. There are many stressors after an accident, emotional, physical, and mental. To be worried about a bill as well can add on to your plate. The bills that can rack up from an accident are stupendous, and you may be stuck with the entire thing. You may also be breaking the law. Car insurance is required in almost every state in the U.S. Not having car insurance is breaking the law and could cause even more trouble than is already being faced. Finally, let's talk about the last of our 3 insurance types, life insurance. Life insurance is a contract that states that benefits determined by the policyholder will be given to beneficiaries upon the policyholder's death. This is agreed upon between the policyholder and the company. However, the policyholder must pay premiums. A beneficiary is the person named by the policyholder. This could be children, a spouse, friends, or family. The beneficiary inherits whatever amount the policyholder leaves behind for them. It is important to consider what beneficiaries will need once the policyholder is gone when deciding how much to leave for them. Some may only need enough to cover final costs. Others may need enough to take over debts or everyday necessities. There are 4 types of life insurance: term, whole, universal, and variable life. We'll start with term and whole life. Term life is only for a period of time. It will only cover the policyholder if death occurs within the dates that the policy is active. Term life policies range from 1 to 30 years. Within term life are level term and decreasing term. Level term is when the benefit amount stays the same throughout the entirety of the plan. In decreasing term, the benefit amount lowers over time. The decrease in benefits usually happens each year the policy is in place. So while you may start with $30,000 in year 1, you may only have $29,000 in year 2 of your plan. Whole life will cover the policyholder if they die at any point in their life. There are 3 types of whole life: traditional, universal, and variable. In traditional whole life, the amount of the premium and benefits will stay the same through the whole policy. Universal life is much more flexible than traditional. In this plan, you may adjust your premiums. In variable life, there is the option to combine your benefits and a savings account for investment. It is called variable because there is the risk that these funds may be lost while investing them. How does life insurance affect your family? The strengths of having a life insurance plan include providing an income for any dependents the policyholder may have been responsible for. That way, the dependents can still have their needs met in the event of a death. Dependents may be your spouse, children, or anyone else that relied on your income. Life insurance also helps pay for your final expenses. Funerals are expensive. In order to help alleviate the stress of a loved one trying to handle the policyholder's death and the cost of it, getting a life insurance policy is useful. Estate taxes can also be covered. Estate taxes can take away from what is left to beneficiaries. Insurance policies can cover that so that beneficiaries don't lose out on benefits. This allows a full inheritance to be left. Without life insurance, dependents can be left without the support they need, and family members could be stuck with your unpaid debts. Especially for those who own a business, your remaining bills could be passed on to living relatives without the means to pay for them. Now that we know what insurance is and some of the things it can cover, you might be thinking, should I get an insurance plan? Or how do I get an insurance plan? The next thing we will talk about are the steps to getting home, auto, and life insurance. Before purchasing insurance, consumers should understand the insurance they are purchasing and know exactly what they want. We talked about how many different plans and coverages there are for home insurance alone. Therefore, it's very important you have an idea of what you want as far as coverage goes. To purchase home insurance, there are 4 steps: deciding where to shop, knowing the details of your home, comparing quotes, then reviewing and agreeing on policy details. Knowing where you want to shop is not limited to companies. It's the location itself that you want to think about. Do you want to shop online, in person, or over the phone? Know this before you start so it decreases some confusion. Be aware of details of your home. These details are how much your home is worth, the dimensions, or if you have any lender requirements. These are questions that will be asked when looking for quotes. Have that information ready. Once you've shopped around, be sure to compare the quotes and policies. You want to be sure you're getting the best quality at the best price. Once you've picked a policy, go over it again, and finally, agree with the company on your home insurance policy. When deciding on car insurance, there are a few more steps than when looking for home insurance. The first step is the same: decide where you want to buy insurance. Following that is knowing how much coverage you are required to have and what you need. Ask for quotes, know who you're getting quotes from, and finally pick your insurance. While you think about how much coverage you actually need, you also have to take into account what is required by the state you live in. Once you have that piece together, you can ask companies for quotes. You should also know where you are getting quotes from. Know who is supplying you with coverage and if they have a good reputation. At the end of it all, you may pick your auto insurance. Life insurance is a very in-depth process. There are a lot of steps and requirements that go into it. In addition, the outcome of life insurance cannot be fixed or handled by the policyholder, so it means a lot to do this process right. Due to this, the first step is crucial. You must know the different terms of life insurance. You don't want to go into this blindly. Understand all the jargon, then move on to the next steps, which are: know what coverage you need, get quotes and pick a policy, gather the required documents, apply for the policy and interview, get a medical exam, get underwriter approval, and finally, sign and pay for your insurance. For the second step, as you decide how much coverage you need, take into consideration those who the benefits will be going to. Be sure it protects them in the way that you plan for it to. Get quotes for the policy you want, then obtain all the necessary documents. Those documents are your ID, your income, your residency, and more. Then you apply for your policy and interview for a policy. This interview could just be submitting your Social Security for the company to verify your health and the company talking to your doctor, or there could be an actual interview. The next step is getting medically examined. This step can be skipped if you apply for term life insurance rather than whole. After the exam, you need to wait for underwriter approval. They are there to decide if the original quote given to you will be what you actually pay. Once approval has been given, and if you approve of the price, then you sign and pay for your new life insurance plan. Be sure to keep a copy of your policy. That way you are able to look over it as you please. That was a lot of information at once, but was all very important to know when planning on getting insurance. Here are a few other things that need to be remembered when talking about insurance policies. Your insurance is your responsibility. You have to know what is happening at all times. You need to know if any changes happen in your premiums, your policy, or who is handling your policy if you're working with a specific agent. The best way for you to get your insurance right is to monitor it yourself. Know what you need. It can be easy to get over or underwhelmed when purchasing insurance, resulting in wanting to purchase everything or not getting anything at all. You don't want to be stressed during the process. It's best to be prepared and know exactly what you want. That way, you can get straight to it. Be sure to ask questions. Buying insurance is a large but worthy investment. If your agent or something in the policy is confusing, then you need to speak up. It's better to ask for clarification than end up paying for something you don't need, or worse, not having the coverage you wanted. Finally, know your budget. Insurance can be affordable and cover you properly. Hopefully, after hearing all of that, you're considering buying insurance, or at least reviewing your policy to be sure it's exactly what you need. For those of you who have yet to purchase insurance, or even those who have it, it's important to look out for insurance fraud. Yes, insurance fraud can be carried out by others, not just the policyholder. Some of the things to look out for are fake insurance companies. There are scammers out there who will set up fake insurance companies and have you pay for a non-existent policy. Be sure to check the reviews and credibility of the company you are purchasing from before sending any money or personal information. Be on the lookout for fraudulent agents. Sometimes the company you are working with is real, but the agent themselves either no longer work there or are scamming you. They do this by charging you for a policy, then pocketing the extra cash, or saying they'll give you a certain policy, but actually putting a lower one into the system. The extra money that was supposed to be going to the policy can now go into their pocket. Lastly, be aware of fake policies. This goes hand in hand with fraudulent agents. Some offers are too good to be true, or just don't have any real coverage. Be sure you're getting exactly what you paid for. The next 2 slides are my references. I hope this presentation was beneficial to you. At the end of the day, as consumers, we only want to buy what is best for us and those we love. Insurance is one commodity that can definitely help towards that goal. Thank you so much for watching. Have a great day.